We'll be going over IRS notice LT75. This is a notice that you might receive if you're a federal contractor and you're receiving a notice of levy based on the fact that you have federal taxes that have not been paid. So we'll go through exactly what that means, what a levy is, and what you're able to do, what your responsibilities are. But I want to point your attention to the top of the form for just a second, the top of the notice, to point your direction in a couple of things. So in the right-hand corner, you have the notice number, LT75, the notice date. In this case, it's January 30th, 2020. You have taxpayer ID number, which in this case is the employer identification number, or EIN, and then a contact phone number with a case reference number. So the most important thing here is the notice date. As we will get to later on in the notice, any action items that the IRS will place upon you are going to stem from that notice date. So pay particular attention to this. We'll circle back to it in a moment. Over on the left-hand side, you'll see the business name and address fields. Normally, if you've relocated and the IRS expects you to keep your address up to date in their files. So normally you can file your next tax return, and the IRS will update your tax records accordingly with your new address. But if you're receiving correspondence in between tax returns, you should probably either call the IRS or file the change of address form. So for business owners, that form is IRS Form 8822-B. That's the change of address or responsible party for a business. You might have completed this if you purchased a business and had to change the responsible party in the IRS records. The equivalent for individual taxpayers is IRS Form 8822. We'll put links to resources we've created on both of these forms in our show notes. So the reason I would encourage you to keep your address up to date is because any action items, such as paying your levy or filing an appeal, they don't stem from when you receive the notice. So if the notice is issued on January 30th, whether or not you receive it on February 2nd or you receive it on February 10th, the IRS is still going to hold you accountable to, in this case, a 30-day time frame from the notice date. So by keeping your address up to date and allowing the IRS to send their correspondence directly to you at your updated address, you're actually helping yourself out in this situation, because there is action you will need to take, or else the IRS is going to start seizing assets. So let's get down into the meat of this notice. So there's a billing summary. It says that you owe $4,823.12. That's broken down into the tax component, penalties, which are just shy of $400, and then interest on both the tax and the penalties of slightly over $100. Over here on the left-hand side, it says your tax is still unpaid. We've asked you to pay the tax, but we haven't received your payment, so we've issued a notice of levy to collect your unpaid taxes. Then it goes further into a little bit more detail about the Internal Revenue Code. Under Section 6330, the federal government has the authority to collect taxes for income of federal contractors without giving an appeals hearing first. So most taxpayers usually go through a lien process, and then you can request an appeal before the levy is actually placed on your assets. So most likely a bank account or some other account where they can just kind of dip in and take money. They're probably not going to start confiscating work trucks or capital equipment or anything like that. They would go for the federal government would go for the thing that is as liquid and straightforward as possible. So if you have an account with $5,000 in it, you might wake up and find out that it only has $100 in it the next day. So they're basically saying, hey, you better pay attention to this. You need to take some sort of action really soon, or else we're going to start taking assets. So at the bottom of this is a payment voucher. You can pay your tax bill, cut the payment voucher out, mail them a check or a money order to the U.S. Treasury. I always encourage people to take a look at the address up here versus the one down here. If you're going to mail a voucher or a check with a voucher, you should make that check or money order payable to the U.S. Treasury. Write your employer ID number on the payment, and then if you include any correspondence, make sure it's included in that. It should be the same ID number up here. And I would always default to whatever the address is on the payment voucher. In this case, I took a quick look. It's the same address that's up here, but I have seen notices in the past where those two addresses are different, or they're in completely like two different cities. So make sure that you're going to send your payment voucher or payment to the address listed on the payment voucher. So that's one way you can do it. You can also go to the IRS website. You can pay using the IRS website to do that. So if you have paid that amount, you should call the IRS to let them know and just kind of make sure that they recognize, that your payment is in the system and needs to be applied to this tax liability. So you can request a collection due process hearing. So basically, if you want to appeal this, then there should be a copy of IRS Form 12-153. That's the request for a collection due process or equivalent hearing. You would send it to the address at the top of the first page of this letter, which is the IRS Cincinnati office, within 30 days. So 30 days from the notice date, not 30 days from the date that you receive it. So if you don't request that hearing within 30 days, you can lose certain rights, particularly a judicial review. So part of the IRS appeals process is that under proper circumstances, if you follow the guidance, such as requesting an appeal through the administrative process, if you do it in a timely manner and the IRS disagrees with you, then you can keep appealing under certain circumstances through the court process, through the U.S. Tax Court, through Court of Appeals, and even up to the Supreme Court. So, but if you don't do the appeal process within a timely manner, such as filing IRS Form 12-153 within 30 days, then you do forfeit certain rights. So this is just explaining that to you right here. This passage here about the denial or revocation of a U.S. passport, for seriously delinquent debt, which this doesn't qualify as seriously delinquent debt. In here, it's defined as $52,000 or more. Then the State Department also will be notified, and this is required by law. You can see right here the FAST Act passed in 2015 basically requires the IRS to notify the State Department of taxpayers that owe $52,000 or more to the IRS. This would basically ensure that the State Department does not issue you a passport, does not renew your passport. If you go to the airport, your passport may be on hold from the State Department. So, if you go to TSA checkpoints, like they're probably going to be notified that you're on a watch list. So, the State Department may revoke your passport or limit your ability to travel outside the United States. So keep that in mind. If you're in the middle of having seriously delinquent tax debt, which means more than $52,000, and a tax lien has been filed, and all administrative remedies under the Internal Revenue Code have lapsed. So basically, if a levy has been issued, or if a tax lien has been filed and you've either forfeited your right to the appeals process or you've gone through all your appeals, then this would apply to your situation. So if they don't hear from you, if you don't make arrangements to pay, if you don't request an appeals hearing, they're going to start collecting property. So wages, commissions, income, bank account, like these are probably in order, like in a descending order. Maybe not the Social Security benefits beneath personal assets. But generally speaking, if you're a federal contractor, the federal government will probably stop paying you on invoices that they owe you, right? So, that could be a possibility. And just one to keep an eye out for because they're going to garnish payments that come to you in one way or another to pay off your tax debt. Here is a synopsis of the billing details that kind of walks you through. In this case, it was IRS Form 941, an employer's unemployment tax return for the tax period ending 2015. And then there's a failure to pay penalty. It talks a little bit about that. You can request an abatement of the penalty. There are a couple of ways where this would happen. So first time, or the first would be considered what's known as the first time abatement. So if the IRS deems that this is a first time offense, or if you meet certain criteria, then you can wipe the slate clean under a large variety of different tax penalties, including the failure to file or the failure to pay penalty. Reasonable cause would be another reason, and there are a slew of different ways categories under the reasonable clause portion of the penalty abatement policy. So, for example, the IRS lists 3 examples here: a serious illness or injury, family member passing away, or if you lost your financial records due to a natural disaster such as a hurricane, a forest fire, whatever the case may be. You can also request a removal or reduction of your tax penalties. And then we'll get down here. A third way would be if you actually requested advice in writing from the IRS, and the IRS gave you advice and then turn around and penalized you. You would be able to remove those penalties. So you would have to you have to be able to demonstrate that you wrote the IRS for advice on a specific tax issue. You gave the IRS complete and accurate information. They gave you a written response back, which you relied on to take a position on your tax return, and then the IRS turns around and penalizes you. So if you meet all of those criteria, or the reasonable cause or the first time abate criteria, you can file IRS Form 843. That would be the claim for tax refund and a request for abatement. So you can knock down some of these penalties as you're paying the tax. Generally speaking, you have to have at least paid the tax or be in the process of paying the tax before the penalties come off. But then in this case, you would see like this $114 would come off of it. And then not only that, but any of the interest associated with that penalty would come off. So most of this interest looks like it would have been applied on the outstanding tax over here. But, maybe in this case, $30 or $40 comes off of the interest based on the penalty. Maybe not that much. But what we'll see here is under the interest charges, the IRS doesn't really have a lot of flexibility in abating interest. But if your tax bill does go down, if you do have penalties abated or reduced, then the IRS will lower your associated interest so that you're not paying interest on taxes and penalties that were removed. There's some links here or some other resources at the bottom of this notice. So we can, take a look at publication 594. That's an overview of the collection process, your appeal rights. We'll put a link in the show notes to an article and a video about IRS Form 12153 here, as well as the penalty abatement and stuff. I'm going to take a quick look at this page right here just to see if there's anything that we didn't cover in the notice. The main thing here, I think, is the installment agreement portion. So you can either request an installment agreement on the IRS website. If you can't do that, then you may be able to file IRS Form 9465. That's the installment agreement request. So we'll put links in the show notes to resources we've created on that form as well. So long story short, if you receive this, it's a notice of your levy. The IRS, will start garnishing assets if you don't take any sort of action. So you can put this on pause by requesting the collection due process hearing. That would at least put a pause on the collections process until you sort through that administrative part. So as long as you're in the appeals process, the collections process is on hold. And of course, you can also request, some sort of a payment plan. You don't need to pay the entire lump sum all at once. You can request some ability to be able to pay it off over 6 months or a year, or multiple years if the case warrants it. So you can request that. The IRS always has the authority to approve it or reject it. So I think that's all we have for this notice. As I mentioned, we'll put links in the show notes to all the resources we've created about the forms covered here. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's anything that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.